Hey, good morning, everyone. This is Kirk here again from Option Alpha. It is Friday, December 9th. Just wanted to send out a quick video update. Doesn't look like I'm going to be making any trades this week, and I'm actually okay with that. I think that, again, as always, patience is a virtue when it comes to the stock market. So we don't want to be too heavily invested all the time and just forcing trades into the market. So I just don't think that the risk reward is there right now for January options. I think that with the market rallying this morning and for the better part of this week, just staying in a tight range, that we just don't have a clear signal, and so it's not worth putting a position on just to get rocked out of the position in a week or two if the markets fall over. But I did have some other interesting trading ideas for you if you are chomping at the bit here to get some trades in. And I'll go over those here towards the end of the video. But if you just take a look at, I'm just on FinViz here and taking a look at the news this morning. So just highlighting the news. I don't read everything. I just kind of see where everything is. Clearly, stocks and futures are rallying on some EU package. So what else is new, right? Another EU news-driven day. If we actually take a look at some of the more interesting things, this is actually the advanced decline lines for the NYSE, and so it's the daily advanced decline and showing kind of the all-in, all-out days. Yesterday was actually a pretty strong day as far as a downward trend goes. We haven't actually seen a day where as many stocks declined as they did for about 2.5 weeks now. So it definitely broke the trend. If you look down here, and using my new fancy highlighter tool, if you look down here on the bottom, we actually have a MACD of the advanced decline line, and you can see that the MACD actually crossed over into bearish territory yesterday. Now, the last time that this happened when it was in bullish territory was back here in the beginning of October, and we all know how bad November was for stocks except for that last day. So this could be the beginning of something new, a new trend as far as advanced decline line goes, as far as more declining issues every day as opposed to more increasing issues every day. So again, something to take a look at as always. The other thing I want to take a look at is oil. Now, if you go to our Facebook fan page, which if you're not a fan, you should be a fan, you can see here that back on December 5th, I had talked about a MACD divergence forming on USO. And a lot of people liked it. And so I wanted to go to that chart and just show you guys that this stuff really works. So, okay, again, December 5th, this is Facebook. I can't recreate these posts. I can't, and you can see we have posts all the way up to that. So I can't recreate these posts. But here's the actual chart of USO, and here is December 5th, right there highlighted. Again, you can see up in the top left-hand corner when my cursor is on it, December 5th. So what I wanted to show you guys here on this is the actual MACD divergence, and it's very clear what the divergence is. You can see that on MACD on the bottom here, we actually had the USO really top out here right near 40 back in mid-November. And that's where MACD topped out as well. You can see that it had that bearish signal where the black line crosses under the red dotted line, or the shorter term indicator crosses under the medium term. Now take a look at what actually happened between these two peaks. So we actually had the market fall. That was okay, right? We knew it was going to fall. And we saw a little bit of a rally, but the rally was actually even as far as tops are concerned. It didn't even make it past there. It was an almost even rally. And yet, the indicator closed lower that day on the 5th, right? So that's your classic and clear bearish divergence signal where you have losing momentum or declining momentum in the security. And yet the security closes even or even higher. It could have closed, it could have really rallied up to here and then come back. It could have, just barely broken the highs. But the key here is that you have declining momentum. That's the real strong indicator for MACD and a lot of these other momentum indicators. So these things work. I mean, you just have to use them and trust them. Now, since that day, we've obviously had some really good declines in USO. So we might see a little bit of a pullback today, just basically purely on short seller squeezing, but the indicator is definitely still pointing towards lower momentum. You can see that we're starting to really increase the momentum to the downside now. So as always, something to consider as you start to look at your charts. Taking a look here at the rut, The rut has been kind of the one chart that I look at most right now because it is so volatile and it has been moving in fairly good range. Now, I mentioned on the last video update to members, which you can click on below if you're on the video commentary page and see that video, that my first line was going to be the midpoint of this huge breakout or this huge white candle. Now, typically, the midpoint of this huge white candle is usually a good area of support and resistance. So right now we're above the market. It should act as a good area of support to bounce off of that, at least short term. If it does break below there, then what we want to see is a successful retracement of that level, holding that level, say 715, and then moving lower. That's what we really want to see if it breaks out lower. But again, futures this morning are higher on all the EU news, so we actually might end up using this level as a support level, which is going to be which was a pretty good target, as I had mentioned before in the previous videos. If we take a look at something like the VIX has started to move higher as well, back into the 30 territory. It didn't take us that long to get back in there. So again, we're starting to see the VIX in elevated levels. This doesn't, of course, mean that the market is going to move 100% lower. Again, the VIX is just a volatility. Now, generally, it is correlated more towards the bearish side because as stocks fall, they fall more hard, or they fall harder. And so even if the market starts to see some really strong rallies, the VIX could also rise as well. But this is the real thing right now that I'm looking at when I look at option pricing tables, is that the VIX is just, it's not high enough and the markets aren't low enough just yet to justify any type of real hard option selling. If you take a look at, for example, SPY, we have our 100 strike put down here from December that's still working and going to expire next week. But anything in January, and this is January here on the SPY, anything in January, we only are really back in the 100 to 95 range to get some really good premium. You can see here's 100 right here, and here's the 95 strike. And for 45 days out, they're only getting roughly $30 to $45 a piece after the market opens today. So I don't know if that justifies enough risk to reward in my book, considering that we're at the same level that we were at for December options. So at 100 or even 95, it's still well within a target that the market could fall by that time. So here's how far the market fell in July, August. So if we see the same type of fall, then we could be really on the doorstep of those options once again. So I just wanted to see the market get a little bit lower. Hopefully we can see that get lower next week. If not, then we're going to start increasing our position allocation next week because we're going to get closer to expiration. But I think at this point, 45 days away, there's no point of forcing trades into the market. The market has ample time to move down towards our positions at this point. If we do end up with a market that trades flat to higher next week, then that's okay. We've actually had some really good time decay, so we can start adding positions with 30 days to go, with 32 days to go. And those positions will start to see a lot faster time decay. But right now, it's just not worth adding the positions. But you can always try some trades on USO, on the VIX. Some of those trades are going to be really good. I think that if the VIX gets up around the 32 range, that you could try a straddle or a strangle on the VIX. I think that would be profitable because it's either going to go higher or it's either going to go lower. 30 area is not really a good area for the VIX to stay that long. It's going to jump around 30. So that might be a good trade as well as you head into the weekend. So as always, hope you guys enjoy these videos, and please give me your comments and feedback as always. Happy trading.